Welcome back to FTfm. Investors are having to look beyond traditional assets such as stocks and bonds in a search for better returns. Joining us to discuss how assets such as farms and timberland, infrastructure and real estate can help investors is Rob Leary, President of Asset Management at TIAA-CREF, one of the world's largest asset managers. Welcome, Rob.
Thank you, Chris. It's a pleasure to be with you.
So it might surprise some of our viewers that TIAA-CREF, a fund manager, is also one of the world's largest producers of pistachios, almonds, wine grapes and apples. Why have you invested in those assets?
Well, it's a great question, and I think you're right. Most investors don't know that about us. But over the years, we have decided and learned, really, that as such a large asset manager, being invested in real assets as well as in the traditional assets like stocks and bonds has been a great way for us to not only earn better investment returns for our clients, but also diversifies our portfolios, takes away some of the correlation with those traditional assets like stocks and bonds, and also it really favors the long-term nature of not only our liabilities, but our long-term investment outlook. Typically, these are things that are not very liquid. They're things that you tend to invest in for the long term. They go through different cycles, and that suits us very, very well, and suits our investors, generally speaking, very well. Also, we think you're also paid for that illiquidity. So we like that excess return, given the fact that we have a tremendous amount of liquidity in our traditional portfolio. We don't need it in that real assets portfolio.
So how significant are these real assets within your overall portfolio?
Well, together we manage right now all in about $850 billion in assets under management. And our alternatives portfolio all in is about 120 billion or so, 130 billion, call it, of that. So overall, it's not a large part of our portfolio, but it's a significant part of our portfolio. And because the returns tend to be outsized over the long term, it makes a very, very big impact.
And it's the combinations of these real assets that makes the difference to the overall portfolio.
That's right. It's the combination of the different return characteristics. Also, different of these asset classes do well under different scenarios. So, for example, and that's what's nice about the lack of correlation with the traditional asset classes. Some of them tend to do well in inflationary times, for example, others in different environments. And we really like that as well overall, again, for the long term. What's also been great about it is it's not only our own portfolios that we're investing in, but a lot of third-party clients as well. We found that, in fact, in many cases, whether it's real estate or agricultural farmland, timber, infrastructure, energy, and the like, that not only do we have an appetite for this, but many third-party clients have an appetite for it as well. And in some cases, we don't even have the amount of capacity that we would need to fill their desire and ours.
What about climate change? I mean, it's very hard to understand how to factor global warming into investment decisions when it comes to assets like farms and timberland.
Yeah, well, it's interesting. It presents both risks as well as opportunities. And first, let me just say this about climate change. We consider ourselves at TIAA-CREF to be very, very good stewards of the environment overall. And so we take very, very seriously our obligation from an environmental standpoint. So no matter what we're doing, whether it's building or owning buildings and making sure that they're environmentally compatible, to owning almond orchards or vineyards and making sure that you're using the right kind of drip technology and being as water friendly as one can be and the like, we try to be very, very serious about the environment. And another way is investing in renewables, solar, wind, those kinds of things, et cetera. So we think about, first of all, being good stewards and doing the right thing from an environmental perspective, but then getting back to your question about what risks climate change poses. Yes, it's true. You know, you could end up owning farmland or different kinds of timber or other types of assets that are affected negatively by climate change because of drought or other conditions, storms and the like. But in addition, it may be that there's opportunities where they didn't exist before. So there are areas of the world right now that are being farmed that 20 or 30 years ago, no one would have thought about farming there. And so being out ahead of that curve and thinking about being where those opportunities lie as climate change goes on is an opportunity for us as well. So it's actually both sides of the coin.
But there must be a danger, though, if there's a big move by investors into these kind of asset classes, that valuations are going to rise an awful lot and that future returns are going to disappoint. I mean, are we seeing any evidence of that so far? Is that a concern for the future?
Well, it's always a concern, but it's no different than the same concern that one would have about stocks or bonds, real estate, which has been going on for years and years. Look, there can always be asset bubbles, and that's something that we always look at. And so to me, that takes discipline, it takes good risk management, it takes really looking at when things get frothy, so to speak, making sure that we're keeping to our discipline and being prepared to say no. There's nothing that says we have to invest in this or we have to invest in that. And if we begin to think that things are getting bid up in a way where the returns won't be there, we just move on to other asset classes, or we try to get more opportunistic about places in those asset classes where we can find value.
Rob Leary of TIAA-CREF, thank you very much for joining us today.
Thank you, Chris.
And for more on this topic, go to ft.com/FTfm.